Last week, I told you why I was holding $28,000 of cash in my portfolio. Midweek, I gave an update where I told you why I still haven't used it. And now, after more market weakness and my cash position growing, I'm sitting on $36,000 in cash, which is about 34% of my portfolio. So in this episode, I'm going to be telling you what I'm watching in the market, what I expect this week starting Monday the 23rd, and what would make me finally start deploying some of that cash. Whether you agree or not, the market has not given us the all clear. The S&P 500 has just logged a fourth straight weekly loss. The Nasdaq is still under pressure, and the same two forces I've been covering in these episodes, oil and rates, are still hanging over everything. Welcome back to the Liam Hyland Portfolio. I'm Liam, a chartered accountant documenting the build of a real stock portfolio in public. This is not financial advice, it is just my analysis of stocks I own. So with cash now up to 34% of my portfolio, this is even less the kind of market where I want to make one giant move. My view is that this is a market for tranches, small pieces, measured entries, and only if the setup actually improves. For me, the framework going into this week ahead is still built around three things: oil, rates and growth, and whether the market is still willing to fund the AI story. Let's start with oil. The week ahead is still dominated by the Middle East energy shock, and oil remains the biggest force pushing inflation fears back up. That has remained unchanged. So this week, if oil cools down, the market can finally breathe again. However, if oil stays violent, it bleeds into everything else: inflation, valuations, consumer confidence, and rate expectations. That is still the main bear case for my portfolio. So on Monday, the first thing I care about is whether oil is showing signs of calming down or if it is still going to remain volatile. Because if it is still volatile, the market has not earned a meaningful risk-on move from me just yet. Second are rates and growth after Powell's speech last week. The Fed held rates steady, which the market expected, but we did not get the reassurance we wanted. Powell confirmed what we're already worried about. Tariffs are still feeding inflation, there's a negative outlook on energy prices, and the path forward remains uncertain. So what do we do with that message? Well, we need to follow how the market prices those expectations in. Do yields settle down? Does growth data hold up? Or do we start getting the worst combination where inflation risk stays sticky and growth starts to soften? That is why I'll be watching this week's Purchasing Managers Index or PMI data release. It is basically a quick health check on the economy, showing whether businesses are seeing more demand and activity or whether things are starting to slow down. And Tuesday's flash PMI surveys are the first useful read we have on how rising energy costs and war fears are affecting the overall business sentiment. If PMI holds up and yields calm down, that helps. However, if PMI weakens and yields continue to stay high, that is the worst setup for stocks, because it means growth is slowing, but money is still expensive. And third is the AI ecosystem. This one impacts the portfolio because the companies I am most likely to deploy into first are my existing positions in Microsoft, Amazon, and Meta. And what the market showed us this week is that the AI story is still very real, but it is more discerning around AI hype narratives.
Now, I don't know if you guys feel the same way, but $500 billion is an enormous amount of revenue. Not one impressed. I know why you're not impressed, because all of you had record years.
Nvidia impressed, demand still looked absolutely enormous, but Micron reminded us that strong numbers are not enough on their own if CapEx keeps rising. So under these conditions, what I'm looking for are the businesses that keep funding this build-out, they keep compounding through it, and still deserve more capital even if the macro backdrop stays messy. And that is where my plan to deploy the cash comes in. I am not going into this upcoming week planning to dump all of the cash into the market. The plan is to let the market earn the first tranche. So here are my thoughts. If the data and price actions start to improve, I can see myself deploying roughly 20 to 30% of the cash first. Not all of it, just that first piece. That first tranche only happens if I get enough confirmation. And by confirmation, I mean some combination of the following: Oil stops getting worse, yields stop pushing higher, the PMI data does not materially worsen the growth picture, and quality tech starts absorbing bad macro headlines better than it did this last week. If I get that combination, I can begin. If not, I wait. And that is where the second half of the plan matters. Because if the data continues to worsen, I am completely comfortable waiting. I don't need to force entries just because the market is red, and I don't need to pretend that every dip is a gift. You see, if oil stays hot, if yields keep rising, and the growth data weakens, then the correct move is to hold off and let the cash reserve keep building. Waiting is not doing nothing. That is also a position, right? It's an active decision for my portfolio. And frankly, in a market that we're witnessing right now, it can be the smart one. So my base case for the week is this. I expect another messy week, another week of more volatility. I expect oil to stay at the center of the story, and I expect Tuesday's PMI data to matter more than it usually does. And I expect the market to keep rewarding balance sheet strength and punishing anything that needs perfect conditions. So I'm not walking into Monday looking for one giant green light. I'm looking for just enough improvement to justify a first tranche. If I do not get that improvement, then I wait. It's as simple as that. My goal here is not to nail the exact bottom. It is to acknowledge the broader conditions impacting my portfolio and deploy capital in stages as the market gives me better odds. So that is the plan going into tomorrow. And I want to know what other investors are doing this week. Tell me what you're doing. Are you holding cash or are you deploying? And what else are you watching before you make that move? Let me know in the comments. Thanks for watching, and I'll see you in the next one.